trade lower as tensions between the US and China continue to weigh on investor sentiment. Japan's Q2 GDP shrinks 27.8%, which is the worst in several decades. The RBI Central Board approves the transfer of 57,000 crore rupees as dividend to the central government for this financial year. Also decides to maintain contingency risk buffer at 5.5%. The Supreme Court directs resolution professionals of insolvent telecom companies to furnish details on the use of spectrum. They also seek the details of spectrum sharing by pact between Jio and Reliance Communications. The court will hear that case today. The Prime Minister laid out his vision for India in its 75th year of independence. Atmanirbhar Bharat, an infrastructure push, border security and military advancement, acceleration of the Digital India Initiative, and a digital health identity program. These were some of Prime Minister Narendra Modi's Independence Day speech highlights. Hi guys, good morning and welcome to Power Breakfast in the Mumbai News Center. I'm Pavitra Parekh. Those were all of the top headlines that you just heard out. Let's take a look at what's happening in Asia this morning. It's actually looking like quite a mixed morning for us and largely lower. Investors continue to monitor the developments around the US and China trade deal. On the data front also, Japan's economy has shrunk around 27.8% on an annualized basis in the April to June period. Now this is close to the sharpest contraction that we've seen on record. So let's take a look at what's happening in the markets. Shanghai and Hang Seng are managing to trade in the green. They're 0.8% higher. But you can look at Nikkei. That's actually looking quite low today. It's because of the GDP that we just mentioned, the Q2 GDP. If we can also get up Straits and Taiwan, then we can take you through that data as well. We have Taiwan and Straits also trading marginally higher today, around 0.3% higher on both of them. Remember, Kospi is shut on account of a market holiday today. If I can also show you the SGX Nifty, that will show you that for our own markets, we should open around 100 points higher. So for our own markets, it's not looking too bad. We'll also have to track the AGR case that we spoke about, which will be later in the day. So that'll be an important cue to track. We will talk about all of those in a little more detail, but let's also take a look at how US fared in the overnight session. So we saw Wall Street end mixed on Friday. Now remember, concerns lingered over the stalled coronavirus stimulus negotiations and simmering US-China tensions. We now have CNBC's Kate Rooney to get us the wrap of everything that transpired on Wall Street.
U.S. stocks finishing the day mixed after investors tried to digest mixed economic data. The Dow adding 34 points, the S&P flat, and the Nasdaq falling 23. Retail sales are back at their pre-pandemic levels after rising for a third straight month in July. Much of that spending has been fueled by government relief funds, which helped put more money in Americans' wallets. But Americans may be spending less over the coming months now that many of those relief efforts have expired. And shares of the popular gaming company DraftKings falling after a wider than expected quarterly loss. The results coming at a time when the coronavirus continues to derail seasons for professional and collegiate sports. CureVac skyrocketing during its first day of trading on the public market. The German biotech company working on a COVID-19 vaccine began trading on the Nasdaq under the ticker symbol CVAC. The stock ending the day above $50 a share. That's a more than 200% jump from its IPO price of $16 a share.
All right, Kate, thanks a lot for taking us through all of that. But that's a global market action. Now let's talk about the Indian market and all of the cues that we're tracking today. We have our research team joining in with what the trade setup looks like and the stocks that are likely to be in the news today. First up, Sonia, let me come to you. Take us through the market cues that we should watch out for today.
Well, thanks a lot for that. The Nifty is in profit-taking mode as we saw on Friday. It closed below that 11,200 mark. The Nifty is facing a bit of resistance around that 11,000 to 11,350 level. We saw some selling coming in from domestic institutions. FIIs, they bought about 47 crores in the cash markets, but DII sold almost 800 crores on Friday. Now, there was selling in large caps. So we saw about 700 crores of delivery-based selling in HDFC. There was 750 crores delivery-based selling in Axis Bank. And the one thing that stands out in the month of August is that mid-caps have seen an outperformance compared to the frontliners. So far last week as well, the Nifty was down 0.3%, but mid-caps were up 1.7%. And in August so far, the Nifty is up 1% and mid-caps are up almost 6%. So there is more participation in the broader markets. The US markets closed largely flat on Friday. US retail sales for the month of July rose just 1.2% versus an estimate of a 2.3% rise. So, some cautious data coming in there. And profit taking was seen across asset classes. So even in gold, you saw, a downtick of almost 4.5% last week. So won't be surprised to see a little more red on the screen, even in trade today. Back to you.
All right, Sonia, thanks a lot for taking us through all of those cues. Let's also talk about the stocks that are likely to be in focus in today's trading session. Hi, Agam, take us through that list.
All right, Pavitra, good morning. Well, I'm going to start with the earnings, and right at the top we have Berger Paints, where it's beaten street expectations. It's still been a weak quarter. We've seen a decline of around 46% in revenues, and margins have seen a considerable 800 basis points depreciation. Moving on to Sun TV, weak earnings, but cost savings have curtailed the fall in operating profits. Its revenues have declined 43%. We've seen EBITDA margins, however, expand by as much as 550 basis points. UBL, the pandemic has weighed on seasonally strong quarter. We've seen revenues decline 73%. And we also have Fortis Healthcare, where it's been a weak quarter, where we've seen revenues decline nearly 47%. Moving on beyond earnings, well, right at the top, we have ICICI Bank, which has completed a fundraising of 15,000 crores via a QIP, and the approved issue price here stands at around 358 rupees per share. We have PI Industries, where the newly appointed CFO, Subhash Anand, has stepped down and cited personal reasons for it, and it's requested early relieving. We also have IDFC First Bank, and it clarifies that the merger between IDFC First and IDFC, the reverse merger is completely speculative. This was, of course, reported on in media reports. And finally, we have SJVN, where it's bagged a 100 megawatt solar project in Dholera Solar, and the cost for this project will be around 450 crores.
Through that list. Finally, let me go across to Nigel. He's going to take us through the cues from the F&O space. Hi, Nigel. Good morning.
Well, morning, Pavitra. I wouldn't be too worried, actually, about Friday's fall. I'll tell you why. Because in the cash market, yes, the institution selling was more than the buying. The DI selling outweighed the FI buying, but that's fine. In terms of shorting, there were no big signs of fresh shorts on the indices itself. Because on the Nifty itself, you did have some unwinding to the tune of close to around 2 lakh shares approximately. So that's important. There was more unwinding that did play out there. And even on the Nifty Bank, 2-3% open interest built up. I'll not be too worried on that front. What did the FIs do though? They added some longs, small amount of contracts, 2,000 contracts odd, but they added longs and they unwound some of their shorts. So that's quite encouraging as well. Remember, they're net long on the index. They have nearly around 58% of their positions on the long side. Besides that, on the options front, well, they bought more puts than calls. And in Friday's trading session, they bought close to 22 put contracts. So in case things go wrong, they have some support out there and some kind of protection as well out there. The good part is they continue to write puts, and they wrote more puts than calls. Nearly around 19,000 put contracts were written, telling you there is not a, they're not expecting a big fall on the indices itself. Well, the SGX Nifty is indicating a gap up. You like to see building onto those gains from there after opening up 50-60 points odd. But what are the levels you look at on the downside? Friday's low is extremely important. 11,111. That's important on the downside. We have ended near the 20 DMA, so that's going to be quite crucial as well. And the 200 DMA, that comes in a little bit deeper. So the Friday's low as well as the 20 DMA, both of them are going to be crucial. In terms of stocks that you'll be looking at, well, a lot of stocks have come out of the F&O ban. So India Bulls Housing Finance, Canara Bank, Century Textiles, Muthoot Finance. Keep an eye out on all of them. While the new stock that's come in the ban is Manappuram. So keep an eye out on that stock as well. We start in the green. Let's hope we build on from there. Back to you, Pavitra.
All right, Nigel, thanks a lot for that. Now that we've taken you through all of the cues that we should be watching out for our own markets, we'll get into a short break here. You don't go anywhere. On the other side, we get you highlights from Prime Minister Narendra Modi's Independence Day speech.